Welcome. In this video, can XCN coin make us rich? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
One of the most significant formations observed in market structures that often represent strong upward trends is the rising trend line. In technical analysis, these trend lines are closely monitored by investors and traders, serving as crucial indicators to interpret price behavior. Clearly visible on charts, rising trend lines typically emerge from a series of consecutively higher lows and higher highs. This structure indicates that buyers are stepping in at increasingly higher levels during pullbacks, signaling sustained bullish momentum. Looking at the latest price action, the current chart reveals a clearly defined rising trend line that serves as a key support level. The price has once again touched this trend line just as it has in the past and responded with strong upward momentum. In technical analysis, such a reaction at a trend line is often considered a buying opportunity. These contact points are generally regarded as zones where large investors, institutional players, or algorithmic systems re-engage, where buyers become active and upward movement is supported. Particularly in the current situation, the fact that the price bounced off this trend line without breaking below it is interpreted as a highly positive technical signal. In technical analysis, a key principle holds: the trend remains valid until it is broken. Therefore, the reaction from this support line indicates that the market continues to respect the trend and that the structure remains intact. When prices continue to make higher lows while resuming upward movement after each pullback, it reveals a fundamentally positive market sentiment. If investors opt to buy rather than sell during dips, it shows that the general market sentiment remains optimistic and confidence is intact. This dynamic also suggests that the rising trend line is more than just a chart pattern. It reflects the collective psychology of the market. The recent bounce from the rising trend line and the strong buying wave that followed create a crucial foundation for potential future movements. With this reaction, investors reaffirm this level as a solid support zone. Buying at this level signifies that confidence is being rebuilt and that upward movement may continue. This behavior also presents a valuable opportunity window for investors looking to open new positions. The technical support offered by a rising trend line not only helps prices hold above certain levels, but also guides market participants. The preservation of this trend line encourages many investors to continue operating under the belief that the trend is your friend. This loyalty to the trend line often attracts new investors as long as the trend remains intact, which in turn can accelerate the upward momentum. On the flip side, holding this trend line is critical for the continuation of the price's upward trajectory. This trend line acts as a wall of confidence for investors. As long as the price remains above it, positive expectations in the market persist. However, if the line is broken, some investors may interpret it as a signal that the uptrend is over. This could trigger increased selling pressure and lead to sharp downward moves. However, the strong reaction seen when the price touched the line in the current case clearly suggests that a breakdown risk is not yet in play. This shows that investors value this level, are unwilling to let the price fall below it, and are determined to hold their positions. This behavior demonstrates that market participants still believe in the strength of the uptrend. Another key point is that reactions from such support zones not only lead to short-term gains, but also lay the groundwork for larger formations. For example, if the trend line holds and price continues its upward movement, it could eventually form larger patterns such as a cup and handle, inverse head and shoulders, or triangle on higher timeframes. This creates significant potential not just for short-term, but also for medium and long-term investors. In conclusion, maintaining this rising trend line supports investor optimism from a technical standpoint and provides positive signals about the price's future direction. The bounce from the trend line could mark the beginning of an upward move, often accompanied by strong buying waves. If the price returns to this trend line, it is highly likely to act as a strong support level again. Previously, the uptrend was preserved thanks to buying at this level, reinforcing market confidence. From this point forward, if the price continues to respect the trend line, it means the upward momentum is likely to be sustained and the sense of confidence among investors will continue. This is positive not only from a technical perspective, but also for overall market psychology. As long as the trend holds, more investors gain confidence, more buying occurs, and the uptrend is maintained in a stronger and healthier structure. But of course, we can't base our analysis solely on trends. Let's now look at other metrics. Stay tuned.
We currently have a structure resembling a bull flag formation, and the price is moving toward the upper boundary of this pattern. According to technical analysis literature, flag formations typically emerge after a strong upward trend followed by a short period of sideways consolidation. If this pattern breaks to the upside, it is expected that the price will continue moving in the direction of the prior trend, with a target equal to the length of the flagpole. Based on the current chart, if the price breaks above this flag, a new momentum phase may begin, which could lead to increased investor confidence and position building. Flag formations generally appear during the consolidation period following a significant price rally. The structure resembles a narrowing triangle after a pole-like surge. One of the most critical aspects of this formation is that volume tends to decrease during the consolidation phase, and a breakout accompanied by increased volume is considered a strong confirmation. If the current setup aligns with these criteria, the probability of a sharp upward move from here is quite high. In this type of technical setup, a breakout to the upside is highly significant not only for short-term traders, but also for medium and long-term investors. Such a breakout may serve as a strong signal that the prevailing trend will continue. When a bull flag breaks out to the upside, the target is generally calculated by projecting the length of the flagpole upward from the breakout point. In other words, the post-breakout move is expected to match the length of the prior rally. In this context, the price approaching the upper boundary of the flag formation can be seen as a buying opportunity for traders applying strategy-based technical analysis. The most crucial detail to monitor at this point is whether the breakout is supported by volume. If volume increases during the breakout, the likelihood of it being a genuine move rises, providing a more secure entry point for investors. Conversely, a breakout without volume may be misleading, signaling the need for caution. The price reaching the upper band of the flag formation is also psychologically important for the market. If a breakout occurs at this level, pending buy orders could be triggered, leading to a sharp and rapid upward move. Additionally, many algorithmic and bot-based trading strategies track such technical breakouts, and once triggered, these automatic buys can further accelerate the rally. The fact that the price entered the flag structure and has since moved toward its upper end may indicate that momentum remains to the upside and that selling pressure is weakening. Since these types of formations typically occur during corrections within strong uptrends, buyers usually step in aggressively at support levels, often preventing the price from testing the lower band. In this sense, the lower boundary acts as support, while the upper boundary serves as resistance. If the flag formation on the chart we're analyzing has developed correctly and the price manages to break above its resistance level, there is a high likelihood that the price will reach its projected target. This could prompt investors to gradually increase their positions or open new ones. After the breakout, the target is typically estimated based on the length of the flagpole. Reaching this target would validate technical analysis strategies and reflect the market's positive response to the structure. Moreover, an upside breakout from this flag formation could be a strong signal not only in terms of technical analysis, but also when viewed alongside fundamental developments. For instance, positive news about the project, new partnerships, growing community interest, or attention from major investors could act as catalysts, potentially pushing the price even higher than expected. Sometimes, investors begin entering positions even before the breakout occurs, which can lead to increased volume within the formation. However, in such cases, traders typically place their stop-loss orders just below the lower boundary of the formation to manage risk. If the pattern fails, the price could drop back to lower levels. Therefore, it is essential to pay attention not only to the shape of the formation, but also to volume and price behavior. In conclusion, the current technical structure closely resembles a bull flag formation. If the price breaks above the upper boundary with strong volume, there is significant potential for a strong upward move. These types of patterns are particularly valuable because they provide measurable targets on the chart. Since such technical structures are frequently observed in the crypto markets, reading them correctly and positioning accordingly can increase an investor's success rate. Given that the target equals the length of the flagpole, if the price moves toward that target, investors could see substantial gains. And if you hold a decent amount when it reaches that target, you could become rich.
The MACD indicator is a widely used tool in technical analysis that allows investors to gain deeper insights into price movements. This indicator was developed to detect changes in momentum and potential trend reversals. It operates by analyzing the relationship between short-term and long-term moving averages and consists of two main lines, the MACD line and the signal line. Additionally, the histogram visually reflects the difference between these two lines. Through this structure, MACD provides clues about potential reversal signals and the strength of a trend. In this context, upward movement of the MACD lines generally indicates a potential upward movement in prices. However, it is important not only that the lines are rising, but also to analyze the momentum and sustainability of this rise. If the MACD line crosses above the signal line from below, this is considered a strong signal that buying pressure is increasing and a bullish trend may be beginning. This crossover is seen by many investors as a potential buying opportunity. Historically, such crossovers, especially when occurring at strong support levels, have often resulted in significant price increases. Therefore, a rising MACD line boosts investor confidence not only technically, but also psychologically. This confidence can lead to increased buying pressure in the market, pushing prices even higher. These bullish signals become even stronger when supported by other indicators, such as RSI or volume. The upward movement of MACD lines may also suggest that a new trend is beginning in the price action. Especially after a period of sideways or downward movement, if upward momentum is observed in the MACD, this is often the first sign of a trend reversal. One key point to monitor is whether the MACD histogram has crossed above the zero line. If it has, this may indicate a stronger bullish trend is underway. This represents a visible recovery in price and signals that upward momentum has begun. Such a development is a highly positive signal for investors and can help shift the overall market sentiment to the upside. In particular, in post-decline recovery scenarios, an upward movement in the MACD lines is generally interpreted as the beginning of a new bullish trend. This can be a strategic decision point not just for short-term traders, but also for medium and long-term investors. The early signals offered by the MACD can provide highly favorable timing for opening positions. Rising MACD lines also indicate that prices are highly likely to continue upward. This creates a positive environment in the overall market and allows investors to take positions with greater confidence. An upward move in the MACD lines also signifies that the momentum behind price action is strengthening. This indicates that buyers are dominating the market, which may drive prices even higher. Especially when combined with breakouts of previous resistance levels, this can create strong upward potential in the market. This potential may increase investor appetite and cause a notable rise in trading volume. Increased volume then acts as another factor supporting the price's upward movement. In such an environment, if the upward trend in the MACD lines aligns with fundamental analysis, this becomes a very strong bullish signal for investors. On the other hand, MACD's upward movement can sometimes signal a price increase before the price actually starts to rise. This makes MACD a leading indicator. In other words, investors may receive early signs of a potential price rally through MACD before prices make a clear move upward. When properly interpreted, this advantage can present significant opportunities. Especially if these signals occur at a support level or a chart pattern reversal point, their reliability increases. Therefore, upward moves in the MACD lines, when supported by other technical signals on the chart, create valuable opportunities for investors. In conclusion, the rising MACD lines not only increase the likelihood of upward price movement, but also help reestablish investor confidence in the market. This environment of confidence can activate the dynamics that drive prices even higher. Of course, no indicator should be used in isolation. However, when MACD gives such positive signals and is combined with other technical analysis tools, more reliable outcomes can be achieved. In this context, the upward movement in the MACD lines can serve both as a strategic evaluation tool and a psychological motivator for investors. Especially during times of market uncertainty, bullish MACD signals can be decisive for indecisive investors and prompt them to take positions. This can directly affect the price and manifest itself in the market. The lines need to move up.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.